second time last year we did it. Last year it was a kind of a general themes. This year we narrowed it down to banking sector and R&D sector, because undoubtedly, as you know, these are two of the most important sectors that is driving our economy. So that's why we need to focus and concentrate on some of these specific sectors. As you know, why this competition? Why this grant? If you see academia or academic institutions, among many responsibilities, have two main responsibilities. One is knowledge distribution, বাংলায় যেটা আমরা বলি জ্ঞান বিতরণ. Second one is knowledge creation, জ্ঞান তৈরি. The first one we can do by teaching, জ্ঞান বিতরণ, knowledge distribution. But if we want to create knowledge that the university should be doing, we need to go for research. And IUB wants to distinguish itself by doing research, by relating research and contributing to the society. We are here in the market for the last 23 years. We'll have to distinguish ourselves by doing something else, something different that really contributes to the society, and that is research. And also, you can teach a course for 5 times, 6 times, 10 times, 30 times. You can't write all of this in your CV that I have taught this course for 40 or 50 times. But if you publish a paper, if you do a research, that will be a stain, that will be in your CV for long. I would say until we die, that will be in our CV. So we will have to go for research, and that's why this is a modest effort on the part of IUB to support your research programs. And we shouldn't be limiting ourselves only to these internal grants. This is a kind of training. By having this training, we should be going outside looking for funds and bringing it to IUB and conduct the research. And I am thankful to all of you. Last time we had 9 proposals. This time, although we narrowed it down to very, very specific sectors, we still have 8 proposals. So I'm looking forward to the presentation. Today we have our panel of experts and discussion, to whom IUB is dated for a long time in detail. They are helping us as adjunct faculties. They are in our selection committee. They are in our faculty development and curriculum committee. Let me introduce them. On my extreme right, Dr. Masudur Rahman from Dhaka University Marketing Department. He is here with us for a long time. And also Dr. Abdul Hannan Mia, Professor MIS Department, Dhaka University. He is also with us. And we have also Dr. Waidul Habib from Asha University. He is also teaching here, adjunct faculty here. They will be giving you valuable suggestions and comments. But একটা জিনিস বাংলায় বলে নেই, কে যেন বলেছিল মনে নাই, রিসার্চ করতে হলে চামড়া মোটা করতে হবে. You got to take all the discussions and criticism positively. These are not meant to
of a business model by focusing on effective loan approval, monitoring and recovery process for the banking sector of Bangladesh. Just a brief introduction of how this idea came about. According to the Financial Stability Report of 2015, which was published in the end of 2014, the total non-performing loan identified as NPL throughout the presentation was around 501.56 billion Bangladesh taka, which is roughly 9.69% of total outstanding loan, which has increased from 8.9% at the end of December in 2013. And this had led the banking sector into a severe crisis, which, as a result of which, it was a concerning factor which the governor of the Bangladesh Bank addressed, that all banks need to work together to address this issue carefully. And this deteriorating factor is creating a lot of problems in the increase in the amount of the non-performing loans. And a lot of banks are faced with the problems that they're not being able to manage the recovery and monitoring of their loans effectively and properly. Non-performing loans are rising for whole of the banking industry, and even though they take different strategies while managing their credit operations, everyone is suffering from this kind of loss, and this is rising aggressively in the industry. Our objective of the study is to analyze the business development procedures of selected foreign commercial banks referred to as FCBs and private commercial banks referred to as PCBs, to explore and examine the credit assessment procedure, risk rating tools and techniques, and credit monitoring and recovery procedures, to suggest ways to develop a proper business model and to improve credit approval, monitoring and recovery procedures for the banking industry. Literature review was done, and it shows that to a great extent the success of a bank is determined by how the bank manages its various kinds of risk. That can be credit risk, operational risk, liquidity risk, and business risk as well. And credit management is also a very vital issue which banks need to look into, and while they're doing their day-to-day operations. Generally, banks try to manage the credit risk and evaluate the process by a combination of policies from government and bank itself, but in more focused terms, they lack a lot of lackings. There are a lot of lackings in their policies and procedures, and they tend to bend them while they're actually monitoring this loan recovery procedure. Referring to the deteriorating and non-performing loan status, which have been depicted in the previous section of my presentation, it can be vividly observed that the efficiency increasing efforts of the banks are failing, that the banks are not being able to reduce the percentage of non-performing loans, no matter whatever strategy or whatever policy they're putting into action. And in order to survive in this very competitive industry, where the banks are mushrooming like anything, they are all competing, but they're not focusing on recovery of their bank, of the non-performing loans and increasing their profitability. Rather, they're focusing on something else and growing in the size of the bank. The financial crisis of 1997 of the East Asian countries realized that the asset management companies can play a vital role in addressing the bad loan problem and can ensure robust financial discipline. Furthermore, there were other literatures which were done which has shown that disposable income and unemployment rate have significant influence also over the non-performing loans. Now, our conceptual framework is a little different. It's more of a flow chart which should be there in banks, but from this flow chart, we are going to extract our variables for our study to be more specific and more focused in order to identify and help the banks develop a model which will enable them to perform better in their recovery of non-performing loans. So we have an approach of service by a client. When a client goes to the bank, there are two kinds of things that the client wants. The client wants a deposit, or they want a credit in form of loans. So under credits, we have processing and recovery unit, and assessment system and techniques, which leads to the credit disbursement procedure, hence monitoring and recovery procedure, and the percentage of performing loan and classified loan, which eventually will have an effect on the bank profitability and sustainability. On the other hand, there are the deposits. While doing deposits, banks need to analyze the competitor analysis and fixed interest rates, which in turn may have an effect on the profitability of the bank. Like I said, this is more of a flow chart, but this is from here we are going to extract our variables in order to do this study. It would be a mixed methodology where we'll be using quantitative as well as qualitative. Qualitative research would be done through semi-structured questionnaire and in-depth interviews of various officials of the bank. That could be the executive directors, the managing directors, the credit risk operations head, the credit department people who are day-to-day involved, and a thematic analysis will be performed to analyze the objectives of the study. At the same time, we would be using quantitative data in the form of published annual audited reports of various banks, of the private commercial banks as well as the foreign commercial banks. And the main hypothesis that we are going to look into is loan performance and monitoring has a significant relationship with the bank's profitability. The dependent variable that we tend to work with are return on assets and return on equity. And our independent variables would be the non-performing loans, the loan monitoring authority, average time for loan disbursement, average interest of loans, decision-making authority, product diversification, and the size of the bank itself. We would be looking at data for about a period of 5 years, and we'll be doing interviews and secondary data analysis, and we would be using ordinary least square regression equations, which will be done through eViews 8.0 or any other any other later versions of eViews that is available in the market at that time. And the two regression equations which we are going to use is ROA would be equals to a constant plus the beta plus non-performing loans plus MON, which is the monetary loan factor, the time of disbursement, the decision-making authority, the average interest rate of loans, the product diversification, and the size of the bank. The same variables will be kept, but the dependent variables will be changed from ROA to ROE. How we arrived to these variables is described in this table through various literature reviews. We came out with these variables of non-performing loans, loan monitoring authority. It is a dummy variable we're going to use. Average time for loan disbursement. On average, the time taken to disburse loans from different time sectors, because in different banks, because of their different policies, because of the different credit methods, the credit procedures, different banks have different loan disbursement timing, even though it's the same loan. Let's say if it's for a personal loan, one bank might take 2 weeks, the other bank might take 15 days, the other bank might take up to 30 days. The decision-making authority, it's a dummy variable, and it is important to take into account because there can be centralized and decentralization of decision-making authority depending on the banks themselves. Average interest rate on loans, product diversification, and the bank size will also matter. And to end my presentation, some of the references which have already been put into our proposal are there. I would like to invite my fellow researchers, Dr. Samuel Parvez Ahmed, Mr. J.M. Waliullah, and Ms. Sumita Das in front to address any sort of constructive criticisms that we may receive to improve our proposal. Thank you.
Thank you, Mr. Dai. It's a very good presentation. I think it is a very good example of good proposal, you know.
All of us share our interesting ideas. We will learn from each other out of the research proposals. And last but not least, of course, I would like to thank our honorable reviewers, Dr. Wahidul Habib, Dr. Maskur Rahman, and Dr. Mohammad Abdul Handan Mia, actually to give us their precious time on a weekend to come here and sincerely giving feedbacks, take the time to read all those vast research proposals and positively contributing to our event. Actually, without their help, it would never be possible to make it a success. Everyone give them a big hand. And lastly, I would request everyone, if you can kindly come over here in front of the banner so that we can take a good photo. Okay, please.